Gekko Global Markets is a relatively new financial services company, but do we need another? Well, that's a question for Akshay Kapoor. I know Gekko is a relatively new company, new to the marketplace. Is there any need for another company like Gekko? Because I do lots of interviews in various offices around London in similar companies like Gekko, so why do we need another company like that?
Well, why don't you tell me a little bit more about the similar companies like Gekko, because I've never come across a company which is similar to us. I'd love to know.
But there's lots of spread betting companies that have good reputations who are established in the marketplace, so surely there's no point of another one.
There's absolutely no space for another spread betting company, you're right. But we have started as a spread betting company, don't intend to be one, or don't intend to be solely a spread betting company. Our vision is to empower our clients by providing them access to a cradle to grave kind of financial experience. We want to provide them access to all asset classes in the same place. We want to give them the tools to invest and trade extremely successfully. And we want them to do this in a scenario which is highly transparent and easy for them. I think the problem with the spread betting industry has been that it has been associated with companies not being aligned to the interest of their customers. Now, the new investors at Gekko are basically bankers, senior bankers by background. And we have seen a lot of innovation in financial services in the institutional side for a very long time. But we strongly believe that there's no innovation that has happened on the retail financial services space, on the high net worth financial services space, and power is still very much with large companies. And we want to basically give power back to the investor. So one of the ways we're doing it is our new trading platform, TradeHub. You can basically trade any product, any asset class, just like you would trade cash equities. So we've got a very interesting product called variable margin. So like most spread betting companies encourage clients to trade with high leverage and low margins, we actually give you the opportunity to trade with no leverage at all. So on every trade, you can decide what your leverage should be, and you can decide to trade with no leverage at all, which means you're just buying stock. And you can do this across asset classes. So this becomes a tax-free investment in any asset class without any risk.
But it's not actual buying of stock though, is it? Isn't it just an instrument measuring the way that asset classes are moving rather than buying actual stock?
That's true. But this is just like contracts for differences. So it is an over-the-counter contract. But how is it different from buying a future? If you buy oil future, you don't actually buy a barrel of oil, do you? How is it different from buying an ETF? When you buy an ETF, you don't buy a paper certificate that gives you a right to vote. So there is absolutely no economic difference between using CFDs or spread bets with 100% margin to access any asset class or doing it in any other shape or form that investors do. So the only difference, so let's take stocks for example. If investors buy stock, most of their stock will be held in a nominee account. In most cases would be held in a nominee account with a broker. So they don't get to see the stock certificate or anything. If you buy stock with 100% margin with Gekko, you don't get a voting right, but you get everything else. You get 100% dividend, no stamp duty, no capital gains tax, and very, very thin margins. And you can change your asset allocation. You can, at any point in time, you can use your iPhone to change your positions. You can do whatever you want. So there is no economic difference between using our platform with 100% margin as an alternative to any asset class.
But isn't there an argument to say that you're making it too easy to access these instruments, because there's a lot of risk associated with these instruments, and you talk about iPhones and making your platform easy to use, but it looks simple, but these instruments are highly complex, and aren't you making it too accessible to people?
I don't think these are complex at all. I mean, I've actually played part in creating and dealing with some of the most complex interest rates, credit, and FX derivatives that have been traded in financial markets for the last 6-7 years. So I think these instruments are Delta 1 products. Delta 1 basically means that if the underlying instrument, so let's say FTSE, let's say you take a spread bet on the FTSE. If the FTSE moves from 6,000 to 7,000, if your spread bet moves exactly from 6,000 to 7,000, there is no difference. So that is Delta 1. So these instruments are actually very, very, very simple. And the way we've at Gekko have approached them is that because of this revolutionary new feature called variable margin, because that we allow clients to actually put in a notional amount when they trade. So actually, one of the ways the complexities come into this is how does an investor decide what size of a position does he want to take? So at Gekko, you can actually say, I want to invest £50,000, or I want to invest £25,000. You can't do that with any other spread bet. With us, you can actually say, I want to invest £50,000, £60,000, whatever it is.
Okay, let's move on slightly. You said that, and I know you've worked for the big banks in the city. Here at Gekko, we're actually slightly away from the main banks in the city of London as such. Do you think that banks and large banks have got slightly complacent?
Slightly. Banks are extremely complacent because they have implicit guarantee from the government, right? In fact, I was reading something somewhere which valued the implicit guarantee to large banks at somewhere between $1.5 to $2 trillion a year, and this is I'm talking about OECD banks. So if you know that you will never be allowed to fail, and if you know that your cost of borrowing is always going to be kept low by friendly neighborhood central bankers, then you will be complacent.
That means Gekko doesn't have a chance, does it, to succeed?
Oh, we do. We absolutely do. Why do you think we don't have a chance to succeed?
Because the banks have so much more power and capital that if they shift into your market space, then you're going to struggle.
If they know how to do it right, you're right. But I don't see any bank coming into our marketplace or thinking about what we're doing. So let me talk a little bit more about what we're doing. So Gekko is a spread betting company, as you say, but we are positioning it as a one-stop financial markets platform where clients can do their asset allocation, where they can trade, where they can invest in any asset class, either in cash form or in synthetic form. So very soon we'd be adding cash equities, we'd be adding funds and those kind of things. So ultimately, I want clients to have only two accounts. Their normal bank account that they use for fund transfer, for credit cards, maybe for loans, and a Gekko account that they use for all their investments, all their trading, and all their financial transactions. And Gekko is the flagship of the Next Generation Finance Invest group. And we've got a couple of other companies in the group that act as applications for Gekko. So you can think of Gekko being the iPhone and the other companies being the apps on the iPhone. So one of them, Ayondo, actually allows you to follow a good trader. And there are a couple of other companies which have very, very innovative products. So what we're trying to do is build a whole ecosystem for small investors where they can do all their financial thinking, investment, right from the cradle to the grave. And I don't see any bank doing that.
Akshay Kapoor there clearly believes that big banks have become complacent. Unfortunately, that's all we have time for now. So from London, goodbye.